Hello and welcome. You're tuned into Market FataFat. I'm Ankita Saxena and with me is Rabinder and we are joining you from the Suzlon studio. This is the show where we get you all the top buzzers in the trading session, either on the back of news flow or on the back of technicals. But before we get going with the rest of the show, let's talk about the new kid on the block, Caliber Mining and Logistics, that's set to launch its IPO on the 17th of July, aiming to strengthen its balance sheet and expand operations after posting a healthy FY26 earnings growth. The company plans to raise 450 crore rupees through a fresh issue and an offer for sale. My colleague Sajid caught up with Mohit Chadda, who's the chairman and managing director of Caliber Mining and Logistics. Let's listen in to their conversation.
Hello and welcome to IPO Central. My guest today is from Caliber Mining and Logistics. It's an IPO which is opening on July 17th and closes on July 21st. The price between 402 to 424. The IPO comprises of fresh issue of 400 and OFS of 50 crores, so 450 crores IPO which is coming in. And joining me now is Mr. Mohit Chadda, who is the chairman and managing director of the company, and Mr. Nikhil Karwa, who is the CFO of the company. Mr. Chadda, to begin with, give us a sense of the kind of business that you do, in which sector it is, and the kind of revenue model that you have.
First of all, sir, good afternoon. And my name is Mohit Chadda, sir. I am chairman and managing director at Caliber Mining and Logistics Limited, sir. So we are a end-to-end coal mining and coal logistic company, sir. We have a history of 35 years plus. Caliber Mining and Logistics Limited was formed in 2014. Its initial name was Caliber Mercantile Private Limited, sir. And it was formed in 2014. From there on, the journey has been quite exciting. Last year, we did a revenue of 1,677 crores. From 2024, the revenue of 953 crores to a revenue of 1,677 crores over the last 2 years has given a CAGR growth of 32%. The average EBITDA is 24.5% plus of last 3 years. The average PAT is 9.4% plus. And it has been a great journey. With me is Mr. Nikhil Karwa, CFO at Caliber Mining. Nikhil bhai, over to you.
Yes. Good afternoon, everyone. So, what we do, we are an end-to-end service provider in the coal value chain. We provide overburden removal work. We do coal extraction. Once the coal is extracted, we do logistics of that coal either through roadways or railways. And we also do some other ancillary services. Out of this, 86% of our revenue comes from coal mining services, and balance comes from other logistics and ancillary services.
Interesting. Give us a sense of the revenue model that you have for this business. So,
sir, be it a...
Sir, revenue model, we do service for a couple of subsidiaries of Coal India. We do work for 30 days in a month for overburden removal and coal extraction. So, overburden removal, once it is done for 30 days in a month, we raise the invoice after the 30 days. So, our revenue comes from primarily from providing the services to Coal India. Coal India has outsourced services to us, and we do mining for them. That is the major 86% revenue is coming from there. Apart from that, logistics services. So logistics revenue comes from either transportation of coal within the mine or outside the mine to the ultimate customers. It can be either through roadways or railways.
Mr. Chadda,
So it is a service-oriented business.
Mr. Chadda, you are raising 400 crores. What is this 400 crores going to be used for?
Sir, there are three agendas which the money will be going to. Number one is a repayment of the debt on the equipment and machineries. Number two is buying new trucks in with that money. And number three is general corpus fund, sir.
Nikhil, if you can give a sense of the kind of borrowing that you have at this point in time and how much of that borrowing would come down?
We have 1,000 crores plus of borrowing as of 26, and 208 out of the IPO proceed will go down to debt reduction.
Okay. And what is the kind of growth that you see in with respect to when you say that you're going to use a part of the proceed for capex, which is including plant, machinery, and trucks? What is the kind of growth pipeline that you have?
Sir, I will answer this question. Since we are in the RHP mode, sir, we will not be able to comment outside the order book which we have today. We have an order book of 9,550 crore plus as on May 2026. So this is a average order book for next 2.5-3 years. So Caliber is going to execute this order book on time, and it gives a clear visibility to our people. And since we can't talk futuristic, so anything what we are going to do tomorrow, we don't know today.
Point taken, sir. Nikhil, if you can give us a sense of the unit economics with respect to removal of overburden, which is there, which is basically, for layman, it's the soil and the rocks before you start mining the ore or the metal. What is the kind of, is it a fixed rate contract or is it based on tonnage? How do you price that kind of service?
Sir, I thank you for that question. What we do is we do bid for the tenders which are floated by Coal India. At the time of bidding of the tender, we need to bid per cubic meter for overburden and per metric ton for coal. So overburden is calculated in terms of cubic meter and coal is calculated in terms of metric ton. Also, our revenue is not dependent on whether we will get the coal and what quality of coal will be removed. Our revenue is dependent on the quantity of overburden which we remove. When I say overburden, you rightly said it is the soil which is the upper layer above the coal. And talking about the unit economics, our EBITDA primarily comes after the expenses which are directly attributable to the revenue, major being diesel and power cost, next being employee cost, which is about 11% of my revenue, and diesel being about 47 to 50% of our revenue. Apart from that, we have repairs and maintenance and consumption of stores and spares for upkeep of our vehicles. So that's a major component of our cost, which gives us an EBITDA of more than 24%.
All right, do watch out for that IPO that opens for subscription on the 17th of July. But with that, it's time for a quick break. Don't go anywhere. After the break, we're getting you the buzzers in the trading session, so stay tuned. We'll be right back. Welcome back. You're tuned into Market FataFat, show where we get you all the buzzers in the trading session. And now we're joined by Osho Krishan from Angel One on the technicals. And of course, Ravinder is joining us from our research team to get you all the buzzers in the trading session. Without further ado, let's get started with all the stocks that are in focus. First up is Satwik Green Energy. Now remember, Satwik Green Energy is in focus on account of a brokerage note. Motilal Oswal has initiated a coverage with a buy rating, and the target price has been set at 565 rupees, which is an upside of almost 23%. Now this is backed by a multi-year renewable energy capex cycle and supportive demand content policies. Now the module capacity expanding from 4.8 gigawatts to 8.8 gigawatts is positive. 6 gigawatts cell capacity and planned 6 gigawatt wafer capacity is to strengthen backward integration. The order book is at 5.9 gigawatts worth around 80 billion rupees, covering virtually all of FY27 revenue. Now, the capacity utilization is at 84%, and the entry into the domestically compliant cell manufacturing is likely to improve the realizations as well. The EBITDA margins is expected to expand from 10% in FY27 to 15% 9% in FY28. The revenue, EBITDA and profit CAGR is likely to be around 38%, 55% and 44% respectively. And this is expected over FY26 and FY28. And the stock trades at a discount to larger peers despite the strong earning growth. So the risk reward is seen more attractive, and on account of that, Motilal Oswal is maintaining a buy call on Satvik Green Energy. Well, let's move on to the next stock that is in focus is Acme Solar. You've picked out for us Osho. On the charts, what are the levels you're tracking for this?
Very good afternoon, Ankita. Firstly, thank you for having me at the show. Well, yes, the technical front of Acme Solar is very positive. It has been in the cycle of higher highs, higher lows, but specifically in today's trading session, the counter has seen a very strong resurgence from near about the 20-day exponential moving average that has been backed by very strong volumes. So I'm expecting that with the kind of strong momentum, the counter is already the zone of 410, 415 can be tested in the short-term period. And again, looking at the overall historical trend, the counter is looking very aggressive, very positive. So I'm having a very strong bullish approach. But 410, 415 will be the short-term target. If it breaches those zones, then again, from there onwards, another 25 to 30 odd points of upside movement can be expected in the short-term period.
All right. That's Acme Solar on the charts, but let's move on to higher buzz, higher fly in trading PDS that has signed an MOU. Talk to us about the deal wins, Ravinder.
Well, as PDS is in focus, the company has signed a multi-year sourcing as a service agreement with global sourcing arm of leading French headquarter global supermarket retailer, and under this agreement, PDS will manage the retailer textile and apparel sourcing from Bangladesh, India, Pakistan and Sri Lanka and Turkey, and PDS expect to manage annual apparel sources of over $250 million FOB value under the agreement, and this will strengthen company's long-term platform partnership with leading global retailers. So back of this positive news flow, stock was up 16% on a intraday basis, but slightly corrected from day's high, but still trading with a gains of 6%.
Right, let's move on then from PDS to Osho. If you get Bellrise for us. Now, Bellrise Industries, it seems to be sideways in the last 1 odd month, 6 months. It's given some good returns of 34%, but then it has been trading a little sideways in the last 1 month. What are the levels that you're watching out for on Bellrise?
See, historically, the counter is again on a very strong secular uptrend. The zone of 50-day exponential moving average has historically provided very strong cushion, and from there onwards, we witness a strong resurgence as well. So looking at the historical trend, I expect that in the coming period, there is high possibility for a breakout and momentum to get seen in the counter. The zone of 235, 236 is the first hurdle. But if it breaches the zone of 236 on a decisive manner, then from there onwards, I'm expecting that the counter can test the zone of 255, 258 on a short-term perspective, followed by 268 to 270 from short to medium term point of view. But overall, the technical setup is very robust. And looking at the historical trend, I expect that from here onwards, there might be very strong momentum that can be seen in the counter.
All right, so that's Bellrise on the charts. Let's move on to the next counter that is in focus, and that is Nuvoco Vista. That zoomed 13% after reporting 9% year-on-year growth in FY21 in quarter first of FY27, with the EBITDA margins largely stable. Now, the company remains on track to increase its capacity from 25 MMTPA currently to 35 MMTPA by FY28. And on the back of these updates coming in for Nuvoco Vistas, that stock is up in a way, 7.8%, though it is cooled off from the morning, but nonetheless holding on to solid gains there. But Osho, coming to you, Bharti Airtel on the charts, how does that look like?
Even Bharti Airtel is looking very positive. The counter has been gaining some kind of strong momentum in the recent period. But again, on the higher end, the zone of 1950 to 1960 is a kind of a resistance level, which even complies with the 200-day simple moving average. But with the kind of formation the counter has set up in the recent period, I'm expecting that the time it breaches the zone of 1960, then from there onwards, a bullish reversal pattern can be seen in the counter for a higher target of nearly 150 to 180 points. So I'm expecting a very strong momentum from a medium-term point of view, and one should definitely keep this counter in their radar list. Once the counter gives a breakthrough above the 200-day simple moving average, a strong momentum can be seen from short to medium-term perspective.
All right, so that's Bharti Airtel on the charts. But coming to you, Ravinder, Astral, again, moving on the back of a brokerage note, tell us what does the brokerage note say?
Well, as on the back of positive brokerage note, Astral is in focus. Morgan Stanley has come out with a note and they have maintained their overweight rating with target price rupees 1660. They say that the Astral offers exposure to attractive growth pools in the building materials sectors, and market share gains and CPVC backward integration are key growth drivers for the Astral Limited, and 1 year forward price to earning is around 30%, which is discount to as compared to company's 10-year average. And on the valuation front, Morgan Stanley they say that the valuations are more reasonable after a period of underperformance, and strong growth and margin expansion expected to support the attractive risk reward at a current level. So back of this positive report, Astral Limited is in focus and the stock is up approximately 2%.
All right, let's move on to the next counter. CDSL is what you picked out for us on the charts. How does CDSL look like to you? We do see some momentum coming in, in the last few weeks for CDSL. Do you see this up move to continue?
There have been various positive developments on the technical front for CDSL. Firstly, that for the first time in this current calendar year, the counter has surged above the 200 simple moving average. Then again, on the weekly and daily time frame chart, the counter has even formed a double bottom formation. So I'm expecting that in the short term period, the counter can see strong momentum. And from medium term point of view, another near about 200, 250 points of rally can be seen. So on the higher end, 1640, 1660 is the target that I'm expecting in the counter from medium term perspective. And in the short term, as the counter is into strong momentum that has been backed by volumes, so I'm expecting that momentum can be seen for short term traders. But for investment point of view, it is more likely to give a decent return from short to medium term point of view.
Right, on that note, let's move on to the next one, IDBI. IDBI gains 3% in trade today. Agencies have been reporting, citing sources that Indian government is close to accepting an offer from the Fairfax Financial Holdings for IDBI Bank, and possibly at a higher price after its own original offer was rejected, as it was below the government's reserve price. And on account of that, IDBI Bank is today up in a way at the highest point of the day right now, trading with gains of 3.7%. But on that note, we will let Osho go. Osho, thank you so much for taking the time out and joining us and giving us all the stock picks. But let's move on to Shasai Tech, that is soaring in trade on the back of a bullish brokerage note. Investec has initiated a buy, citing dominance in the payments card manufacturing sector. My colleague Mitali is now joining us with the details of that note.
Right, so we see that shares of Shasai Technologies are in focus after Investec has initiated a coverage in the stock, given a buy rating, and has given a target price of rupees 430, implying an 18% of upside if you see from the last closing price. Now, Investec's bullish view is actually driven by the company's leadership in the payment card manufacturing market, where it commands nearly 32% of the market share, has relationships with over 66 banks, and generates around 97% of revenues on a recurring basis. Also, the core payments business, it is expected to benefit from the card issuance, the rise in credit card penetration, as well as the premiumization instead of the growing adoption of UPI. But IoT is actually the key growth driver for this company. Investec expects the RFID and SIM eSIM solutions to drive nearly 45% growth CAGR between FY26 through FY29. Overall revenues are expected to grow at 12% CAGR between FY26 through FY29, and company's profit after tax, it is expected to reach that 360 odd crore rupees mark by FY29. Margins are also expected to remain strong at around 26%, and Investec believes that the regulatory approvals, the manufacturing scale, and also the sticky banking relationships, it creates strong entry barriers for the company. The key risk, it remains the slower card issuance, the execution challenges in IoT, as well as the rising competition. But as of now, the strong bullishness coming in from Investec, it has kept the stock in focus in today's trading session.
All right, that was the last stock pick for the day. But with that, it's a wrap on this edition of Market FataFat. Rabindra and I will take a leave. Thank you so much for joining us.